Good evening. This is Tom Alexander. This is a special U.S. stock market report. It is Thursday, October 16th. It's about 5:15 p.m. Eastern time in the U.S. So this is a report that will pertain to current trade and trade as we head into Friday. Now, the the SPX is in an eerily similar position as it was last Thursday. Last Thursday evening, I also did a special report. And I pointed out the fact that the SPX was in balance and that we're probably going to have a very sharp move. Well, it's Groundhog Day. I'm going to tell you the same thing. The SPX is in balance and we're probably going to have a very sharp move. Let's take a look at the charts and some of the evidence and the rationale behind my conclusion and what would invalidate my conclusion. Okay, so let's just start here. This is a chart of the SPX. Now, this is last Friday's dramatic decline. We had, I think this was like from print high to print low, 3+% to the downside. Now, from tonight's close, from the day session close on Thursday to the low is about 1.22%. That's not that big a deal. The daily ranges are currently greater than that. Now, what is important? Super important is that we haven't had a 5% decline in months. We're pushing historical timeframes for that type of thing to occur. If this market manages to get below this level, and you could very easily get to this level and have some pushback and have some balance in here, I'm just suggesting that below this level, there's really nothing for support under an auction market worldview until you get all the way down here until about this level. Now, please believe me, I'm not suggesting we trade through here and go straight to here. I'm just suggesting that below this level, you're in an elevator shaft to here. And that's a function of the market being so vertical in all time frames off of this April low. I've been talking about that. You're probably tired of hearing it, but it's true. Now, we had this extraordinary drop and we've been chopping and churning all week long. The last 4 days have been a complete chop fest. We closed higher here. We closed lower on Tuesday. We closed higher on Wednesday. And here on Thursday, we're closing lower. Now, if you notice this, what is this? Well, it's a balance area, right? And here's what it looks like. This is last Friday. This is Monday through Thursday. Now, what did last Thursday look like? Well, it looked like this. And I posted a special report. I'm going to post a link to that in the description, or at least I'm going to attempt to do that. We'll see how successful I am at that. But we had this glob of trade heading into last Friday. On Thursday night, I posted this suggesting we were on the cusp of a highly probable sharp break. Now, this structure, this auction structure, has much more range to it than did this one. This is about as compressed a structure in this time frame as you're going to see. So that made it even more probable that you were going to get the sharp break. However, this structure for the SPX, for a stock index, is pretty compressed. Now, something else about this structure, it's not neutral. We closed on Friday. Thursday. We closed today below this high volume node. This is a high volume node of this structure. The general guideline, and emphasis general guideline, when you're trading a balanced market, you want to be looking for opportunities to take trades on the price side of that high volume node. So that would imply shorts below about the midpoint here. Okay, right about here, which this coincidentally would be the point of control, and then longs above it. But this area, the SPX has to get through this area to restore the idea of a bullish resolution and immediate new all-time highs. Otherwise, it becomes, the lower it goes, it becomes increasingly probable that we test and or take out last Friday's low. Now let's take a quick glance at some of the other indices. This is the SPX, the NDX is in here somewhere. Here we go. It's not quite as nice of a Gaussian balance area as is the SPX, but it's all over the place. Higher close, lower close, higher close, lower close. And then the last one I want to point out, and then we're going to get to something else that I think is immediately important. The Russell. Now, the Russell has decided to come to life. All of a sudden, after years and years and years of underperformance, the Russell had this ripping move off of last Friday's low into new all-time high ground. This is the level. This was the double top that we formed over a couple of years. We tested it on 11/24. We first hit it back here in 2021. Tested it again in 2024. Tested it here in September, got above it in October, spiked above it again. Now we're right back to that level. So the Russell is one to keep an eye on here. If we could very easily crater in the NDX and SPX, and the Russell hold this level. We'll see. That would set up a real interesting scenario if that does happen. But let's not get too far ahead of ourselves. I think the most important thing you can take away from this evening is to be paying attention in the NDX and SPX. And let's see if we don't break lower immediately and test last Friday's lows. Now, look at VIX. VIX spiked hugely today. VIX closed at above 25. And it closed above 25 with a market that is really basically doing nothing. So the market is nervous about something. People are buying protection. This is showing you a nervousness about the current structure of this market. I talked about this exact same thing last Thursday evening. I don't know if it's going to turn out the same way, but let's at least be alert to the possibilities. You guys have a great evening. Please, by the way, like, subscribe, hit the notification bell, all of the wonderful things that help grow the channel through the magic of the YouTube algorithm. You guys have a good evening. I'll speak with you again very soon.